Are debits and credits confusing to you? Well, you're not the only one. In this video, I'm going to show you debits and credits in about 10 minutes. Watch to the end and you will learn debits and credits easily. This is the easiest way to learn debits and credits. Let's get going. What does debit and credit actually mean? Debit means left side and credit means right side. It does not mean plus or minus in this circumstance. Double entry accounting. What does that mean? Well, this means that every transaction that we do in business accounting will affect at least two accounts. What is an account? Accounts are what we categorize things in, like the chart of accounts. This is an important thing to learn. You'll want to study examples of each account. That way, when you need to decide to use a debit or a credit, you'll know which one to use. Now we're going to go over the accounts. These are important to learn and to know. Assets. What are assets? They're like cash in a business checking account, equipment, vehicles, land, and inventory. Liabilities. Many times these accounts have the word payable in them, like accounts payable, notes payable, or bank loan payable, or taxes payable. Income. In this term is often interchanged with revenue. A good way to remember income is revenue minus expenses equal income. Revenues. An example of this would be sales revenue, like the sales of goods or services. Expenses. Example of this term could be a payroll expense, utilities expense, rent expense, COGS or cost of goods sold. Owner's equity. The amount the owner invests in the business. An example, the business owner invests cash into the business or takes withdrawals in cash from the business for personal needs. Gain. An example would be if the company sells one of its assets, not an inventory item, for more than the book value amount. This would be a gain. Loss. An example would be if the business sells one of its assets, not an inventory item, for less than the book value amount. This could be considered a loss. What's the accounting equation? Well, in accounting, it's assets equal liabilities plus owner's equity. Let's go over an example. Margaret decides to open a new sole proprietor business and invest $20,000 in cash to start the business. The accounting equation would look something like $20,000 in assets equals 0 in liabilities plus $20,000 in owner's equity. T accounts, what are they? Well, T accounts are used by bookkeepers and accountants. T accounts are simply a way to visualize how each account will be affected with a debit or a credit. Each account has its own T account. For example, cash, which is an asset, on the left side it has a debit, and on the right side it has a credit, and it's in the form of a T. That's simple as that. Same with the liability next to it, which is a bank loan payable. Debit to the left and credit to the right. Okay, now we are getting into the meat and potatoes, so to speak. Journal entry. What is it? Well, journal entries are another way to show how each account will be affected with a debit and a credit. This is probably the most common way to show how each account will be affected. It will include the account names, the date, the debit amount, and the credit amount. And there's an example. On January 1st, 2023, cash was the first account. The debit amount was $250. The bank loan payable was the name of the second account affected, and the credit amount on that was $250. Remember, the total amounts of debits must be equal to credits. Now let's talk about accounts that are increased with a debit. Remember, debit's on the left side. Accounts that are increased with a debit are assets. Examples of that is cash, accounts receivable, inventory, notes receivable. Expenses, like rent expense, salary expenses, utility expenses, advertising expense. Losses, loss on the sale of an asset. Dividends and draws. Sole proprietor withdraws an asset for personal use. In a corporation, dividends are debited when they are declared. Now let's talk about accounts that are increased with a credit on the right side. Accounts that are increased with a credit are income and revenues. Both of these terms are often used interchangeably. In either case, they are increased with a credit. Liabilities, accounts payable, notes payable, unearned revenue are increased with a credit. Owner's equity, shareholders' equity. When an owner's equity is increased, it's with a credit. Gains. Gains are commonly increased with a credit. Okay, now that you know the basics, let's do some examples. Let the fun begin, right? Okay, the first example is on June 3rd, 2022, the business gets a loan from a local credit union and borrows $12,000. Okay, you'll look on this journal entry number 1. You'll put the date in there, June 3rd, 2022. The name of the first account that is affected is cash, because we're getting more cash. Debit is the one we use because it's an asset and we're increasing it. So that's what we put there, $12,000 debit. And the next account that's also increasing, but it's a liability, is bank loan payable. And that is on the credit side. Remember, the total amounts of debits must be equal to the credits. Let's do some more examples. On April 12th, 2023, the business provides a service in the amount of $500 and was paid immediately. So the two accounts that are affected are cash and service revenues. So you do the journal entry like this. You would put the date, and the name of the first account, of course, is cash. And cash is increasing because we're getting money in, so that is a debit of $500. Service revenues is affected, and that is going to go as a credit for $500. Our debits match our credits, so we're good. Next example. On April 30th, 2023, the business provides a service in the amount of $300, and this time the customer has 30 days to pay. How do we do that? So we put the date down. The two accounts are going to be accounts receivable and service revenues. So in the first account affected, it's going to be a debit of $300. And service revenues is going to be a credit of $300. And you know that the debits must equal the credits. All right, another example. On May 1st, 2023, the business pays $2,500 rent to the landlord for the May rent. The two accounts that are affected are rent expense and cash. Rent expense is going to be a debit of $2,500, and cash, since we're paying out cash, is going to be a credit of $2,500. Let's go on to the next one. On May 15th, 2023, the business receives a down payment for a future service yet to be completed in the amount of $750. What are the two accounts that are going to be affected? The first one is going to be cash, because we receive cash, it's going to be a debit. And then the other account is unearned revenues, which is also increasing, but we know that we increase revenues on the credit side. Okay, you got to remember that the total amount of debits must equal the credits, and we do, so we're all good. Thank you for watching. You now have an understanding of debits and credits. Feel free to like, comment, and share.